Good evening, everyone. It's 9:29. Do we really need to have to wait those last 10 seconds or 15 or 8, 6, 5, 4, 3, 2, blah, blah, blah. Anyway, this is James coming to you from Dividend Stock Talk. What we do here is we invest in dividend stocks for monthly and weekly cash flow. How do we do that? Well, we're going to get to that in a little bit. We basically stick to the stocks that are getting ready to pay a dividend. Well, there's over 3,500 companies that pay a dividend every 90 days. That's a lot of check writing if you think about it. Now, if you wanted to get your share of some of these dividends, hey, jump on in and see what we can do. This trading strategy has been around since the 1600s. Believe it or not, the stock market has been around since 1600s, over 400 years. And one of the very first strategies was buying a stock to collect the dividend. People have been doing this for centuries. Well, I shouldn't really say that because people haven't been around for centuries. People have been around for decades. You know, I've been doing this for, close to 10 years. But what we want to do is I want to simplify this to make it simple and easy for you to buy a stock, collect a dividend, sell it for a profit, and move on to the next company. Does this work on every dividend stock? No, it does not. I have to say that again slowly. It does not work with every dividend stock. That is why we created a dividend stock software. The software basically goes into the data stream, which houses all the data, the high, the low, the close, the open, the volume, all that nice, neat, fun stuff of every single stock, every single day. And it sifts through it and finds out which stocks or which companies are going to do what we want it to do. Basically, we want to buy the stock, collect the dividend, or the dividend's equivalents. And what I mean by that is when the stock moves up, predictably, we want to capture that amount and then get out, sell it for a profit, and move on to the next company. Does it work all the time? No. I'm still holding companies from February. We're almost into July. February is what, 6 months ago? 5 months ago? Been holding it for 5 months. However, I'm still collecting the dividend. Okay? Collecting a 3% dividend on that company. And I'm waiting for it to recover. If it recovers, great. If it don't, hey, I'm collecting 3%. I don't have all my money tied up in any one company. I like to diversify. And that's what I suggest you do too. You don't put all your money into one company. That's just foolish. Spread the risk. Okay? Because it doesn't work all the time. So let's jump in and see what we're looking at this week. All right, like I said, it's Wednesday, June 28th, 9:32 p.m. And this is Dividend Stock Talk with your host, James Gardino Sr. I got to throw the senior in there because my son likes to come in and pretend to be me every once in a while. Answer questions, answer my phone, answer my mail. It's kind of funny sometimes. All right, let's just get to it. Now, I'm going to show you the two different trading accounts that we trade. One has a lot of options, and the other one is just strictly dividends on steroids. What is that? Well, we basically stick to 4 different trading strategies. One is dividend capturing. So we buy the stock before the EX date. Hold it through the date of record. Okay, now the date of record by some of the rules by the FCC says in order to be the registered owner of the stock, you have to go through what is called a settlement period, which means you buy the stock, hold it for 2 days before you are the legal owner of that stock. So if you buy it in the morning and sell it in the afternoon, you don't really own that stock. You buy it right now, you're not the owner. It takes 2 days to settle. Okay? So buy it today, by Friday, you'll be the owner. Tomorrow, you won't be the owner. It'll be in your account, but you won't be the registered owner. There's a difference between buying it and being the registered owner. It takes 2 days. You like that? 2 days? Okay. It takes 2 days to be the registered owner. So that's why we buy before the EX date. Because the EX date is usually 2 days before the date of record. And it's the last day the stock trades before the dividend's paid out. So, you buy before the EX date, you hold it until after the date of record, and then you sell it for a profit. I'll give you a for instance. Let's say IBM's trading at 100. So you buy it 2 days before the EX date at 100. And then after the date of record, 2 days later, you sell it for a profit. You bought it for 100, so sell it for 102 cents or 103 cents, 104 cents, because you already collected the dividend, and that's the main objective. Collect the dividend and sell the stock for a little bit more than what you paid for. The little bit more is usually going to be what I like to tell people, the commissions. So to cover the commissions cost. So you're basically just collecting dividends. All right, that's one trading strategy. Another trading strategy is double dividends. We have a software that actually shows you which stocks have a tendency to go up twice the amount of the dividend. So if the dividend is 50 cents, the stock will move up $1. If the dividend is 10 cents, the stock will move up 20 cents. Double dividends. Not all companies do that. That's why the software isolates which companies do that and when. The third trading strategy would be dividends on steroids. What that is, this was my very first trading strategy. You buy the stock 10 days before the EX date. Okay? And you sell it on what's called a trigger trade. That means you're doing 2 trades with 1 transaction. You're buying it and selling it at the exact same time. You're buying it, and after that is filled, it automatically sells it at a 2.5% profit, or whatever size profit you were looking for. I like to use 2.5% because I've been doing this for so long. 2.5%, it seems to be, let's say, for lack of better words, a sweet spot. It's kind of good, kind of not good. Sometimes it goes up higher, sometimes it doesn't hit that 2.5%. So that's a little bit more complicated. And the that was the third strategy. The fourth strategy is what we called the dividends equivalents, or dividend trading. Now, briefly explained, yes, we buy the stock 10 days prior to the EX date. We also use the trigger trade. Now, with the trigger trade, you have a couple of choices. The first trade can be at the market, or it can be at a limit price. Let's say you don't want to spend more. Let's go back to IBM, $100. IBM at $100. You don't want to pay more than 100. So you buy IBM, certain amount of stock at 100 limit order to open. I know it sounds complicated, but once you set up your account, you don't have to worry about that. And setting up the account is usually it doesn't take that long, but we can walk you through it. Once you set up the account, all you're doing now is just adding the numbers, 100 shares, 500 shares, 1,000 shares. But everything else is already added and already there. Okay, so back to the dividend equivalents or dividend trading. If the dividend is going to be 50 cents and the stock is at 100, you want to buy it at 100, the limit order, and then you have it trigger trade, triggered at the filled price plus 50 cents. And it all goes out as one trade. And I'm going to show you how to do a couple of those in a little bit. But for now, enough jibber jabbering. Let's jump on in and see what we're doing. Okay. This is our first account we're looking at. JPM. I'm so disappointed with JPM because last week we did a credit spread on a debit spread on JP Morgan. And JP Morgan didn't do what we wanted it to do. So we ended up buying JP Morgan at I think it was 86.5. Okay. Now, come Monday morning, we needed to get rid of it because it was putting our account on a T, close to a T-rate call, and we didn't want that. So we turned around and sold it at 87. Okay, we sold it Monday, 87. As you can see, look at this. It hit 90 today. So you do the math. I sold it at 87 on Monday and $3. That's not a lot. If you think about it, $3 per share. Great. How many shares did you have, Jim? Well, and 5,000 shares. That's $15,000 bucks. Anyway, Can't get mad about that stuff because we did make money on the trade. And that's all I was looking for. Because no matter what happens in the market, you have to keep your eye on the goal. The goal was to collect the dividend, collect a small profit, get out, and move on. You can't kick yourself over, hey, I should have held on to it longer. No, I shouldn't have held on to it longer. Take the profit, run to the next company. Okay, so now it would appear I have $139,000 to spend. Yay. Let's jump in and see who is doing what this month. Okay. I only seem to be coughing when I'm doing this broadcast. Why is that? I didn't cough all day today. All right. Let's clear this. Clear filter. Okay. Now, today is the 28th of June. So, 10 days from today, 5 days is the 5th, 10 days is the 12th. So, we'll be looking at July 12th. Just so happens on July 12th, there are 27 companies. All right, now, considering it's just the first week of July, actually the last week of June, there are no monthly options, so we have to look at weekly options. To get the weekly options, we're going to click on this little gear right here. It says Show Action Menu. This is all the neat things we can look at. I'm going to go right here. It says Public N through W. What does that mean? Who knows what it means? But I'm going to go down here for the companies that have the weekly options. What do we got? We got 1, 5, 6, 7. Only 7 companies. I can tell you right off the bat. CL, Colgate-Palmolive, no brainer. We're doing that one. I'm going to show you in a minute or two. Okay. Yum used to be a dividend king. Why did Yum actually lose its dividend king status? Because they stopped increasing the dividend payments. To be a dividend king, you have to increase your dividend payments to your investors every single year for a minimum of 50 years. So, Yum Brands actually had over 50 years worth of increased dividends, and all of a sudden they stopped increasing the dividends. Why? They're still making money. All right, the dividend amount is only 30 cents. Let's start at the beginning. AET. Is that American Eagle Outfitter or something like that? Oh, Aetna. That's an insurance group, isn't it? Okay, so let's pull up Aetna. AET. Okay, Aetna starts the year out right around 119, drops to a low right around the beginning of November at 105. From there, she jumps up to hit 135 with the drawback of 118, then back up to where we are today, 151, almost 152. And you know, let's quickly take a look at the seasonality, see how this thing normally performs in the summer months. Okay, down here to standard, and we're going to click on the seasonality right here and find out what this thing normally does. Here's where we are right now. Now, I'm no genius, but today's Wednesday, so we have Thursday, Friday, so we have 2 days. How much money can we make in 2 days? Can we make at least 10 or 20%? Let's give it a try. Let's try to make $2,000. That's 2%. All right. As you can see, this is where we are right now. Just watch the crosshairs right there. Okay, this is Wednesday. We got Thursday, Friday, and then we're out. Okay, so let's do this one. Let's trade AET. It's at 151, 152. All right, we want to go the spread, and we want to use a vertical spread. See, all this stuff here, a single, we use that for covered calls. The vertical, which is what we're about to do now, we can buy a vertical call, be a credit spread, a call credit spread, or a call debit spread. And then there's the put credit put, and then there's a debit put. So there's 4 different ways that the stock can go. So you can do 4 different trades. But the back ratio, calendar, diagonal strike, all this stuff gets a little complicated, and I don't want to confuse you guys. I want to stay simple, because I'm basically a lazy trader. I want to get in, I want to get out, I don't want to be bothered. So I got 2 days. The 149, 150 is at $1.58. That can't be right. 94 cents. I'll make 6 cents. That'd be 6%. That's almost free money if you think about it. All right, let's quickly take a look. All right, how much is this costing us? How much are we going to make? All right, I'm going to say no to this one right off the bat. The maximum profit we can make is $300. Okay, here's the order description right here. Buy 50 verticals, which is Friday the 30th. The 149, 150 at 94 to open. That's just the legal technical trade. I mean, that's what the trade is. All right, the break even is 194, 149, 94. Long way off that one. That's almost like free money, but it's $4,700 to make $300. That's not even 8%. 8% for 2 days. You know what? I got 140,000, so let's just do it. Okay, it's. Oh, I got how to turn it on. Like I said, it's about free money. Okay, see this one, I would love to do this one, because look where it is. It's 166, and the most I can make off of this one is 250. However, the stock's basically at 152, which means it has to go up 50 cents. Now, do I really want to do that? No. I want to do a trade that is basically a given. Okay, like that one I just showed you. Let me go back to that one so I can show it to you again. Okay, the 149, 150. As you can see, the stock price, let's go here. Put this back to stand so you get a better view of it. Okay, the stock right now is at 152. Basically 152. It's 150, 192. Come on, that's 152. All right. As long as the stock stays above 150, which is right here, I'll make that $300. Okay, remember we're shooting for $2,000, so that's $3,000. So I got another $1,700 to go. All right. Now, this thing hasn't seen 150 in about 2 weeks, and I don't think it's going to hit that low again. So let's go to the next one. Oh, as I was saying, as long as the stock stays above 150, we're going to make that $300. So if the stock goes up, we make money. If the stock stays the same, we make money. If the stock goes down, it can go down all the way down to 150.01, and we would still make money. Okay, so everything looks happy for this one, but it's only 8% return. Granted, 8% return for 1 week sounds like a lot, but it really ain't. Let's go to the next one. Okay, that was AET. So next on the list is Yum. We are going to do Yum because Yum is cool. Let's throw Yum in here, find out what Yum is doing. All right. Yum starts the year out here for the low at 57. Within a couple of weeks, she jumps up to a trading range of, what is this? This is 62 to 65, 66. And she basically trades there for almost a whole year, making a breakout in February, coming back to that same area. And then she made another breakout just recently. in May, but we're at 74 right now. I'm a little leery of this one. Granted, they have the dividend coming up, and the dividend's 30 cents. It's a relatively nice dividend for a $70 stock. But we have 4 down days in a row. Okay, so let's see what we can do. Trade, yum. Well, wait, before we do that, let's go to the seasonality to find out what this normally does. What does Yum normally do this time of year? Okay, this is where she is now. This is what she normally does. All right. Okay. As you can see, hit a little low right there, but then it jumps back up on the 30th. Usually. Okay, so that looks good. Let's see what the numbers look like. Okay, we got, let's get this out of here. 74. Yeah. Ooh, I like this one. As long as she stays above 74. As long as she stays above 74, by the end of the week, we will make a nice profit. Okay, so what will we be making? Let's find out. Okay, open that up. 850. Okay, so let's check out the math on this one. The maximum, okay, here's the order here. Buy 50 vertical Yum 100s, weeklies, by the 30th of June. Okay, it means they're expiring this Friday. All right. And 17 means 2017. Here's the trade right here. It's 73.5 by 74. So the only money I can make is between 73.5 and 74. So as long as it stays above 74, I'm going to make that money. Now, how much am I going to make? I am going to make $850. That's the maximum I can make. Can I make less? Nope. Can I make more? No, wait a minute. I can make less. That's if the start. Let's not worry about making less at the moment. What we're buying is we're buying this position. As long as the stock stays above 74 by the close of business on Friday, we will make that 850 bucks. Now, how much is it costing us? It's costing us $1,650, and then the commissions is $82. So for a grand total of $1,731. Now the neat thing about that is, check this out. 850 is about 50% of 1,700. So that means I can make 50% return on my money for 2 days. Thursday, Friday, I can make 50% as long as the stock stayed above 74. Is it going to stay above 74? We don't know. But guess what? If the stock goes up, I make my 50%. If the stock stays exactly where it is, I make my 50%. The stock can even go down just a little bit, and I'll still make my 50%. Okay, my break even, that means, well, everything's a wash where I lose and I make, but anyway, what a wash is 73.83. Okay, so anything over 73.83 is profit. Do I do it? I'm going to say yeah, because I can make over 50% for 2 days. 2 days. Yum brand. Okay? Yum. Don't know why they dropped off the Dividend Kings list, but they used to be a Dividend King, which is good, which means they had a great track record of paying their investors. So, 50 contracts. Here we go. Now, does that mean I'm going to get them? No, it doesn't mean that at all. It means my order is up, and I'm going to show you that. Here, let's go this real quick. Okay, I got 2 orders. AET, which is the insurance company, and Yum. These are just orders. What does that mean? It means absolutely nothing. First thing in the morning, the market maker will say, all right, I'll give you that order, or I won't give you that order. So it's up to the market maker first thing in the morning. Now, I buy at the open of the market because I really don't care. I'm a lazy trader. I don't want to put the price in, and I want to stand there and stare at it. Okay? If I buy it at 33, great. If it fills at 32, even better. Am I going to panic if it doesn't? No. Okay, so we did AT. Let's look at TRN. Who is TRN? Trinity Industries. Okay, TRN. Let's put them in. TRN. Open that up. Find out what we're doing. Okay, TRN starts way down here at 1755. She looks almost like the last company we just looked at. The low of the year, 1755. Within a couple of months, she tries a trading range of 23 to 24. Goes sideways for a few months. A little bit of dip there. Then a nice jump in November. Right. Election time. Look at that. November 8th and 9th. Goes from 21 all the way to 27. It's a nice jump. It's over 10%, 15%, something like that. Trades in a range from 8 to 9 months between 25 and 29. And she settled right where she is now at 28.35. Now, I don't like... Okay, see, she's not at the high of the year. So the high of the year is 30. But she had a high here, 29, so there's room for me to get in, make a little bit of money, and get back out again. Now, see, this was the high of the year. I'd say no, but it's not the high of the year. Okay, so it's just high for this period. Okay, so let's trade TRN, see what it looks like. Whoops, before I even do that. Here we are. Okay, so this is the seasonality right here. This is where the stock is right now. As you can see, the crosshairs there. We got 2-3 days for it to go up, slide sideways, so push goes down, then shoots up again. Then this is only a 2-day trade, so let's see if we can do a 2-day trade on EM 28. Okay, so it's at 28.35 now. Let's put TRN in there. TRN. What are you looking at? TRN. And we're looking at 28.35. Oh, that can't be right. Oh, that's right, because it's 28.35. See, look at that, how low that is. See, if I buy this one, then the stock would have to go up in order for me to do it. Let's see what my break even is on this one. Break even is at 28.25, which is 10 cents into it now. Anything above, yeah, but then I have to wait. It has to go up for me to make money on that one. Okay, let's get out of there. $42 gives me 8 cents. All right. It's a little bit less than 20%. 2 days. I'm complaining about 20% in 2 days. All right. All right, we're looking at 50 contracts of the 27.5, 28, which means it has to stay above 28, which is right here, in order for us to make a profit. 2 days. She's in a roll. She's got 1, 2, 3, 4, 5 up days, 6, 7. Can she do 2 more up days? She could. The volume's nice and steady. All right, let's do it. Why not? Okay, so we have potential 4 to the 3. That's 7. All right, potential 400 here. The very first trade was 300. So this makes it 7, and then the other one was 8. That's 15. So we're very close. All right, that was TRN. TOL. The heck is TOL? Toll Brothers. 8 cents. Now, I normally don't chase 8-cent dividend, but we're not chasing the 8 cent. Now, here's a perfect example. I told you I don't trade at the top of the market. TOL, Toll Brothers, started the year off at the low of 25. She quickly made an incline to 28, traded there for a couple of months. Basically traded sideways, 27 to 29 area, jumped up, It hit 31 for a couple of months, and then from there she gaps up and goes on up to where she is now at the high of the year. Today she made the high of the year. Do I want to buy this and chance looking for an 8-cent dividend at the high of the year? No, I do not. I want to be somewhere in the middle. I don't want to be at the bottom. I don't want to be in the basement digging a hole, and I don't want to be standing in on a ladder reaching for the stars. I want to be somewhere between the high of the year and the low of the year, preferably with room to move. This one doesn't look like it gives me room to move, but just for the fun of it, let's take a look at the seasonality and see what that says. Ugh. Okay, well, seasonality is telling me to do it. Let's quickly take a look at the trade and see what that says. TOL 39. Yeah, there's no room there whatsoever. She's at 39.60 now. So I can go one down. 39.50. It's 10 cents. Do I really want to risk 10 cents? I don't know. Alright, give me 500 bucks. This is a 25% return. Alright, the max profit I can make is 500 as long as she stays above 39.50. And my break even is 39.40. See, we're spending 2,081 bucks, and we're making 500, which is about 25%. Now this brings me over my $2,000 mark that I've been shooting for. So what the fuck? It's just going by what the seasonality tells me, and it has a dividend coming up. All right, so let's go market watch. We just did Toll. Abbott, isn't this Abbott Labs? Yes, Abbott Labs. 26 cents for Abbott Labs. ABT. Okay, ABT shows nice seasonality. Let's see what it looks like on standard chart. Ooh, all right. Abbott Labs starts out at the low at 37, quickly jumps 37 up to 45. It's a nice $10 move. That's nice. That's like a 20% move. Slowly drops back down to the $37 area. Then jumps back up to the $45 area. Goes sideways for a bit. Then she skyrockets up to 48, which is where she's at now. Now we have 4 down days in a row. Now 4 down days in a row constitutes a trend. Do I really want to jump in and see what's happening? All right, we already found out that Abbott Labs got their dividend coming up. They always score good on the software. If you're not a member, go check the members area and find out, or become a member and find out, you know, if Abbott Labs, how they score on the software. Okay, so Abbott Labs is at 48, and let's find out what it looks like. ABT. Now, at 48.48, and we can't do 48.50 because then we have to go up. And I don't like have-tos. So we're going to try the 47.5, 48 for 1 cent. This is going to be a no. 2 things going against us. All right. We got 4 down days in a row. I don't like that. However, they do have the dividend coming up, and it's a very strong indicator that it does go up at that time of year, and the seasonality says it goes up also. But we could go for the 48.50s. However, the stock has to move up. No ifs, ands, and buts about it. It has to move up for us to make money. Because if it doesn't move up, we don't make money. If she stays the same, we don't make money. If she goes down, she don't make money. So that alone, we're going to pass on Abbott Labs. Sorry, Abbott Labs is a great company, don't get me wrong. But at this moment in time, the numbers aren't working for us. Okay, we could do Abbott Labs for next week. Let's see what it looks like for next week. 48. 42, no. No, because then it has to go up, and I don't want to deal with it, so no. All right. Abbott Labs is a no. ABB, what is this one? AbbVie Incorporated. Never heard of them, but look at this. 64-cent dividend. Ooh, I like that. ABBV. Let's see what they look like. Ooh. I don't like that. Okay. ABBV starts the year at 60. Quickly jumps up to hit 67. Slow decline for the low of the year, down to 55. Right around election time. So at election time, this thing goes from 56, jumps up to 61, trades there for a couple of months, and slowly up to 65, trades sideways for a bit. Now, for some strange reason, beginning of May, she's at 65. Now she's at 73. The high of the year is 73.67, which does give off enough room to make that dividend play. Okay, so let's see what everything else says. The seasonality says la 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 la. All right, right here. It's gonna go down for 2 days. See that? That's where we are. She's going down, and then she's gonna go up. So this will be a good trade for next week. Not this week, next week. But just for shits and giggles, let's find out what they look like. ABBV 72.92 standard 72.92. All right, 72.50. Oh, really? She's just got to go sideways for 2 days, and I can make a nice little profit. All right. I might do this one. 71.72. See, 72 is right here, and that's an awful big drop. And I can still make a nice little profit. All right, so we're already over our $2,000 goal that we have for this week. This will give us another $500 and give us a 25% return, or close to 25% return for 2 days. 2 days, Thursday, Friday, that's it. So as long as she stays above 72 by Friday, we got that going. All right. All right, that was ABBV. So who's next? All right, that's that. We got 2 more to go. EOG. Who is EOG? EOG Resources, a 16-cent dividend. It doesn't really thrill me, but hey, let's take a look. EOG. All right, EOG starts the year off somewhere around 82, between 79 and 84. She trades there for a couple of months, jumps up to the 90 area, 90, 95, trades there for 5 months, 6 months, something like that, right around end of November. Then she jumps up to hit a high of the year for 109, and from 109 is a slow decline. She hit the bottom at 86. It bounces off that to settle in the 89 area at the moment. So she's in the 89 area, and let's see what the seasonality looks like. Okay, here's where she is. No brainer. Look at that. Gotta love it. She has a couple of indicators. Number one, software says she makes a nice little hits for the dividend capturing. So we want to capture our dividend. This thing's going to go up in the next couple of days. So we want to jump in and see if the numbers are going to work for us. EOG. Okay, so here's EOG. Let's get out of there. That's 9 days. I don't want that. I want 2 days. Here we go. What are we looking at? Oh, wow. I've been on for almost an hour. 89. Okay. Whoa. Now, this is a tight call. Because she's at 89.02. Which is very close to the break-even point. Okay, as long as she stays above 89 at this point, we'll make money. Stay the same, make money, go down, tiny bit, like 2 cents, but that's a big chunk to me. That's over 50% return. Okay, let's see exactly what it is. Ouch. Look at that. 14, almost a $1,500 trade, and the max I can make is 1,100, but the stock has to stay the same. Okay. Sorry, greed got the best of me. No, just kidding. All right. What happened was the stock had the dividend coming up. Okay, the stock has a tendency to go up when the dividend's coming up. Now, we got 2 days to go, and it's got to stay above 89. Now, as you can see where the current trend is, let's drop this down a little bit. Okay. She makes a high of the year right here at 109. So you know there's plenty of room between where she is now and where she has been already during the year. The low of the year is way down here at 78. I'm almost smack dab in the middle at 89. Now, as you can see, it's almost a steady downfall. Okay, it goes up, hits the high, profit taken. Hits high, profit taken. Hits a high, profit taken, high, profit taken, high again, profit taken. Another little profit taken, another one, profit taken, another one, profit taken. Look at this. She hits here. She hits bottom, went up a little bit, went back down. It looks like there's a little bit of resistance right here at the 86, 87 area, which is right where we are, which is right here. So that a double, triple bottom. I don't know if you want to call it that. It's kind of close. But here she is. As long as she stays above 89, we make money. So stock goes up, we make a nice big chunk. Stock stays the exact same, we make a nice big chunk. If she goes down, and I'm talking down just a tiny bit, we can make money. Our break even, where was our break even on that one? Break even is 88.78. 88. All right. So give me plenty of room for a break even. All right. So that's good. All right. We got one more to go. This is a no-brainer. Clorox. We're going to do that one anyway. CL. All right. Colgate Palmolive, right? That's who it is. Colgate Palmolive. Yeah, Colgate Palmolive, 40-cent dividend. These guys have been in business for over 100 years. They're not going anywhere. It's a good, solid company. They are a dividend king. They've been on there for quite a while also. All right, so we start off the year right there at 70. She jumps up, hits a 74 area, and she trades sideways for a couple of months. Comes down to the low area of 65, trades for a couple of months there. Then towards the middle of February, she jumps from 68 up to 73, travels sideways for quite a bit. And she's still going sideways. She's at 75 now. Let's see what the seasonality says for Colgate Palmolive. All right, my friends, that, my friends, is a no-brainer. I can do this for 3 weeks. Look, I can do it here. I can do it there, and then I can do it there. Okay, I get 10 days for the dividend to come out, which would be right about here. So I got this week, next week, and the week after. So I can do Colgate for 3 weeks. Awesome. Remind me. If I forget, remind me. Colgate Palmolive for 3 weeks. Okay, so let's trade Colgate Palmolive and find out how much they are going to give us. All right. CL. All right. 75. Right here, 74, 75. There we go. Sweet. All right, so if she stays the same, goes up, good. What's this one? 42, give me 8 cents. That's not a whole heck of a lot, but it gives me more stability, for lack of better words. Get 3 down days in a row. That's not good. Could this be double bottom? It goes up, comes back 1/3, goes up, comes back 1/3, goes up, comes back 1/3. More than a third. I don't know. Is that bottom? It's going to go up. It's a big risk. No risk, no reward, right? Okay, what do we got? 20%? That's a little bit less than 20%. Okay, why am I bitching? A little bit less than 20%. Big deal. Let's go for it. because I went with the other one, it'd be a little bit risky, and I really don't want to be that much on the risk side. I got enough risk this week. All right, well, that's it. You know what else we can do? We got $123,000. Let's buy a bunch of Colgate and do a covered call. So what can we do for a covered call? All right. Covered stock. Okay, she's at 75. All right, sell 10.75s at 74.50. Okay, let's see what my profit is on this one. Now that kind of sucks, doesn't it? Look at this. Maximum I can make is $430. It's going to cost me $74,000 to make $430. Gives you a perfect indication, or perfect signal, or strobe light, or whatever you want to call it. Say, hey, this is expensive shit. All right, that's a crappy return. 75.50. Oh, let's cancel that one. Delete. 75.50. How much is that? All right, 7 out of 10, 75. Blah blah. All right. I'm not going to do that one. It just doesn't look happy. All right, I think that's going to be enough for tonight. You know, I think we went over quite a bit. Let's check and see what kind of questions we got. If there are no questions, we could be... Hey, hi James, I learned so much from your videos. Cool. What's the name of the software you've been using? Let's take a swim. Thank you so much. I trade in Robinhood because I am a new trader. Is there any way that I can predict the rise and fall of stock like James is doing with Think or Swim? Wow. Well, I'd love to be able to help you out with that. But Robert, what we're doing here is we're only invested in dividend stock companies. Okay? I'm going to give you a quick little for instance. Okay? So bear with me for a minute, and hopefully you'll catch on to this and why I do this. All right. Let's go back to here. Okay, Market Watch. Now, today is June 28th, right? All right, we're going to get a clear filter. Okay, so this week alone, you have, what is that? 6 companies. Okay? I don't know if any of these make any sense to you. Okay, Vail Resort, Johnson Controls International. Hey, they're right here in Sarasota. Canadian Imperial Bank, AAH, ADS, Advanced Admission Solutions, blah, 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 ABV, okay, whatever. That's 5 companies. Here we got 7 companies for Tuesday. That was yesterday. Today, 182 companies went EX today. What does that mean? If you bought it yesterday, any one of these companies should be collecting a dividend on. What does that mean? It means absolutely nothing at this moment. Because what we would have to do, we'd have to put all these 182 companies into our software to find out what it did. So what I'm going to do is I'm going to quickly grab a few of these and then show you why we do this. Okay, so today being the 28th, right? Now, remember I told you we like to buy 10 days prior to the EX date. So today was the EX date, okay? So 10 days prior to today would have been the 14th. Now, we would have wanted to buy these on the 13th because that gives us a full 10 days because you wanted to get out by the 28th, which was today. So 10 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you would have wanted to get out yesterday because you wouldn't want to hold it today because today was the EX date. Okay, so that being said, we're going to look at a few of these companies. We're going to look at buying them on the 13th and seeing if they went up the equivalence of the dividend. So first one we're going to look at is ABDC, and we're looking at 34 cents. Okay, ABDC. Okay, now I'm not going to go through all this crap. I just want to go through the last few weeks. Oops. Okay. And we were saying we wanted to look at the July 13th, right? July 13th, right here. Okay. Had you got this one 10 days prior to the EX date, are you listening? 10 days prior to the EX date, look what happened. Okay, now up here gives you the date. This is the opening stock price. This is the high of the day. This is the low of the day, and this is the close. Now, I always do my orders the day before. So first thing in the morning, as the market opens, all my stocks get filled at the opening of the day. That is me. How you do it, that's totally up to you. So if you use the same strategy I use, I'm going to show you what could have been possible. Okay, so it's 10 days prior to today. This thing opened up at 13.25. Come on. Okay, remember that. Look right here. Okay. 13.25. We're only looking for 34 cents. So 34 cents on top of 13.25 is 13.59. Did it make it the first day? No, it didn't. Did it make it the second day? No, it didn't. The third day? No, it didn't. Fourth day? No, no, no. And there it is right there. The high was 13.69. So 4 or 5 days later, you're out with a nice little profit of 34 cents. It's not a lot, but hey. Now look at ACRE. ACRE. Okay, this one we probably would have done also because you know the high's here, the low's there, and we're right about here. So let's look at the 13th. Okay, the 13th. Oh, that's the 14th. We won't go back one day. The 13th, right there. Okay, 27 cents for ACRE. It's a $13 stock. She opened up at right here. Remember this? Opening of the day, 13.37. So 27 cents on 13.37 is 40.64. So 13.64. Nope. Yep, there it is right there. 13.86. 3 days. Okay, you follow me so far? ADC. ADC. Okay, this one is another one. We probably would have gotten to this one also. Okay, the high is up here, the low is way down here, and the stock price is right about there. Okay, we're looking at the 13th. Let's go back one. All right, the 13th. 50 cents. She opens up at 47.08. And the high is 48.11. So you would have been in and out the very same day. Okay, see where I'm going? It's 4 for 4 so far. AGNC. AGNC. Okay, AGNC. Now this one, without it, I'm not going to tell you I would have done it, I would not have done it, because it's, 10 days ago. May have, I may not have. It all depends on a lot of other factors. But I'm just pointing this out to show you why we do this strategy. Get in, get out, get the profit, move on. Okay, she goes sideways for quite a while, drops down here, makes a low, and then she goes up and up, up. Now, see, 10 days ago, she would have been up here, which would have been the high of the year. And I usually do not like to buy at the high of the year. So I probably wouldn't have done this one, but just in case you would have, let's see what it looks like on the 13th. The 13th is right there. Okay, and AGNC is only looking for 18 cents. Opened up at 21.36. 18 cents on top of that is 46.54. So 21.54. First day now. Second day you're out. Okay, so that's 5 of them. 5 for 5 so far. It's 182. I really don't feel like going through all of them. But this is just to show you that depending on a lot of other factors, by 10 days prior to the EX date, we're looking for the goal equivalent to the dividend amount. Get in, grab that profit, get the hell out. You want to get out within the 10 days. You always want to get out before the EX date if you're using that strategy. Okay, so how can you predict that everything's going up? You can't. There's a lot of factors that go into it. Okay, I'm specifically using dividends as an indicator. Okay, now just because a dividend's coming up, it doesn't mean the stock is going to go up. There's a high probability that it will, based on the historical factors of what it did before. It gives me a good indication of what it's going to do. That's why I created the software. So if you're a member, a paid subscriber, then you get access to the software. You get access to all the ones that did make it through. I'm just going through this list rather quick just to give you an idea. All right, so back to some more questions to see if we have any more questions. Other than that, basically done for the day. Yes, lovely. All right. Okay, that all being said, no more questions. I've been on here for an hour. I'm basically done. You guys have a great night. If you're not a subscriber, hey, subscribe. Get the email, get the list emailed to you. You know, take a stab at it. You know, if you don't like it, get your money back. It's basically that simple. Anyway, you guys have a great day. This is James from Dividend Stock Talk, and we are out of here.